Tom Chu, good to see you.
Good to see you.
Happy New Year. What is our market navigator?
We're going to talk
today?
a little bit about maybe the fact that there is no Santa Claus rally this time around, but also it's been 2 banner years, right, for the stock market in a row, so that's good. But will it be a three-peat? Our next guest is bullish on equities in the coming year, but says that it's time to get back to basics, the fundamentals when it comes to actual stock picking. So joining us now is David Miller, the co-founder and chief investment officer over at Catalyst Funds. David, when we say back to basics and we say fundamentals, we are talking about many different metrics, but which basics and fundamentals are you talking about with regard to stock picking in 2025?
Yeah, the basics I'm really focused on are the things that drive the quality of the business. What does their revenue growth look like? What does their earnings growth look like? What's their return on equity, their return on capital? What type of current and forward PE are you paying? And that's really what I'm looking at.
Okay, so if that's the case, they always say that the bottom line is the most important. The profits are the most important for the company. Ultimately, it's about a company trying to make money for its shareholders and everybody else in the ecosystem. Where exactly is the profit story in 2025, and what types of companies get you there?
Yeah, well, the thing about the stock market or the S&P in general is that, historically, if you go back 20 years, P's were around 20. Now, today they're in the mid 27-ish type range, maybe 25 on a forward basis. But ironically, I think they're actually a lot cheaper than they used to be, not meaning that, that P is lower than the other P, but when you compare the types of companies and what they're really worth, if you look at the economy 20 years ago and you look at, 2005, the largest companies in the S&P 500 were large, very capital intensive, relatively cyclical businesses. They were, banks like Bank of America, Citi, JP Morgan. They were General Electric, General Motors, Ford, firms of that type of nature that both required a lot of capital, had relatively tight margins, would also be relatively cyclical. Whereas you look at the companies that are dominating the S&P today, and it's completely different. They're powerful monopolies that are growing rapidly with very high free cash flow, very high margins. You had net margins back in 2005 around 7% versus 12%. Today. And when you think about a company like a Google or an NVIDIA or a Meta, these companies' margins are much more like almost printing money compared to what it used to be a couple decades ago, which is why I think we're still in store for a pretty powerful year ahead, because those companies' businesses are still firing on all cylinders, and I think their valuations are very reasonable.
Brian and I were talking in the break alongside Kelly about the minting money, the aspect of who can kind of make it, how they can do it. What's the top pick then that you have for 2025?
Yeah, so, amongst, you look at the Magnificent Seven, and I think there's a good reason they call them the Magnificent Seven. These really are wonderful businesses. But you look at Google in particular, they're the cheapest of the bunch. They're probably 22 times forward earnings. They're likely to grow top line and bottom line revenue about 12% over the upcoming year. You got about 4% earnings yield on the company. I think they're very well positioned and very reasonably priced relative to the growth that you see that they've been able to put up in the cloud. And even their core search business is still growing at a pretty healthy rate, but close to 30% on the cloud.
All right, David, the top pick is Google. Thank you very much, and wishing you a happy and prosperous 2025.
Thank you. Appreciate it.
Brian,
glad to be here.
It's interesting
Dom.
Yes, I do know.
And I know you.
Yeah. The Alphabet story is interesting. Remember earlier, we had a downgrade, right? An analyst downgrade on the shares, but the stock was still up. It remains to be seen what the sentiment is like for many of these mega cap stocks in 2020.
We got to go to Kelly. Here's my question, though. Everybody loves Google, but here's what I'll say. Number one is, Kelly said earlier, I use Gemini. Okay, fair enough. That's Google product, but you do wonder, will AI damage or help Alphabet's, Google's business model?
I don't know. I'm a Copilot user, so I'm in the minority, I guess, right now, but I'm just trying to diversify our usage.
How did you get
AI.
Copilot? I don't have Copilot.
It's coming to our Outlook.
If you go to Bing right now, if you go to Bing
coming to
right
our
now,
Outlook.
You'll see a Copilot button right on the top there.
Microsoft is going to jam. It's going to help us.
We can't wait.
I'm going to send it over to you guys.
I'm going to send it back to you.
Thank you very much, guys.